Hello and welcome. My name is Andrew Fate. I'd like to welcome you to this week's Minds and Money 5 at 5 show, which today is sponsored by IBK Capital and is brought to you in association with Resource Global Network. For those of you attending 5 at 5 for the first time, the aim of 5 at 5, 5 guests at 5 p.m. is to maintain engagement between investors and miners through a lively, interactive format whilst we wait the return of physical events. A few admin announcements before we start. If you want to ask a question, there's the chat function, which is at the bottom of the screen, or you can also go and in the participants function, you can ask to be unmuted, and we can allow you to ask your question live. We'll also be having some polling questions throughout the 5 at 5, where we invite you to all go and vote and voice your views. For this week's show, we have a battery metals theme focus, and to discuss this, we have a great lineup of guests. They are Grant Mourre, Chief Executive Officer of SPC Nickel, Harry Barr, Chairman and Chief Executive Officer of New Age Metals, David LeClaire, President of Oberon Capital, John Hykawy, President of Stormcrow Capital, and your host for today, Mike White, President and Chief Executive Officer of IBK Capital. Mike, can you perhaps tell us a little bit about this week's show and IBK's focus on battery metals?
Sure, absolutely. Thank you very much, Andrew, and thanks to your team over at Minds and Money for providing us with this platform to have this conversation today. I'm, as you heard, my name is Mike White, as people call me, and I'm the President and CEO of IBK Capital Corp. We're a boutique investment bank located in Toronto, Canada, and have been operating mainly in the mining space through advisory roles and fundraising in the mines and metal space now for over 30 years, 32 years actually, as of just February that passed. So we're very proud of our track record, very proud of the companies that we've helped build. We typically get involved as these companies are emerging, whether it be exploration or development or any type of activity along the supply chain there in terms of metals. But typically when these companies are smaller and emerging and budding juniors and help them as they grow and prosper. We are metals agnostic, but today we have a forum that is grounded in the EV space, battery metal space, and very happy to have two of our portfolio companies. One is SPC Nickel and the other is New Age Metals. We're going to hear more from them soon, but SPC Nickel, as the name would suggest, is involved in nickel. It's up in Sudbury. And New Age Metals has two great projects. One's a lithium and the other one's a palladium project, both in Canada. And we'll hear more from Harry Barr about that. So just full disclosure, as I mentioned, we do own these stocks. We also have today two people who are involved in capital raising and investments in the mining and metal space. One of them, as you heard, is the president of Stormcrow Capital, and that's John Hykawy. And we're going to hear more about what he's doing in the space and his capital company is active in. And also we have David LeClaire, who is the president of Oberon Capital, and we're going to hear more from David. This is an opportunity for everyone on this panel to speak about what they're doing, what they're up to, what they enjoy in life in terms of metals. There is a focus, like I said, on battery metals, so we'll have some discussions around that, and then we'll end it off with some questions. If you have questions, as Andrew has noted, please put them up on the chat board. I've got the chat board open here, so I'll be able to see all your questions as they're asked. And if there's anything burning and I feel the need to interrupt, I will interrupt the speakers. Otherwise, we'll wait till they've completed the conversation, and then we can field their questions. So we're going to start today off with a poll, just to get people's, just to get an idea as to what people think about the EV space. And do you want me to read it off then? The poll here, the first poll that we have is, when do you think you'll own an electric vehicle / hybrid car? And if you can just let us understand that would be great. It's always plays into the forecast. There's such demand for these metals, and the demand is predicated on the demand for these vehicles and other electronic devices, but mainly electric vehicles, which are new and emerging in the space. So I'm always curious as to when people think they're going to own them or if they already own them. We were chatting before this panel opened up about that. I have, I don't personally have a hybrid car, but there are many on my street, mainly Teslas. And but for the life of you, I couldn't tell you, other than underground garages in downtown Toronto, I couldn't tell you where to charge them. So, but so I it's this question: when do you think you'll own one? And for me, I think I'll have one in the next 5 years. But I'm curious as to what people have to say about that. So let us know, Andrew, when that poll comes back.
Yep. So I think we can end the polling now, and I think the most popular answer is 54% saying 0 to 5 years. So you should be able to see it up on the screen there now, Mike.
Okay. Okay. Wonderful. So look at that. So everybody, so the 54, so half of the people here believe that they'll own one in the next 5 years. So that, that plays in well in terms of these demand forecasts. Perhaps we can start off here by hearing from John. Do you want to kick us off, John? Maybe let us know I'm just going to close this poll here because I can't see. There we go. Maybe let us know a little bit. There we go. I can see you now, John. Let us know a little bit about what you're up to, how it pertains to the battery metal space. Maybe a little bit of note just on lithium and nickel in particular, because we have two great companies that represent those metals. And we'll take the conversation from there.
Whenever somebody asks me, Mike, to describe what I do, I keep realizing I've got to try and make up a new answer because the last one wasn't really that great. I don't have a quick summary because it's kind of catch as catch can. My firm is called Stormcrow Capital, which would suggest that we do financings and nothing but. Actually, we're more of a consultancy. We happen to be an investment banking firm on the side more than anything else. For example, a few years ago, we worked for about 2 or 3 years for POSCO of South Korea. POSCO had a very interesting lithium production technology, a cheap way of making lithium hydroxide. And they're still in the process of developing that, but they needed a source of feedstock. We identified a variety of options for them. Eventually, they came to us because they were having no success in basically negotiating one of those entities and taking it over as an acquisition. And we ended up negotiating, sourcing, basically coming to an agreement and passing that over to POSCO when they purchased the lithium tenements from Galaxy Resources in Argentina. So it's a financing engagement. Yes, it's an M&A engagement, but it really derived from the consulting work that we were doing on different options for them. So I study the markets for and the future pricing of everything from lithium to nickel sulfate to cobalt metal and sulfate to rare earths to tungsten, tantalum, and anything else that my clients consider a critical material for them. It can range through to fertilizers and titanium dioxide pigments, but we're not here to discuss those today. So our specialization is really the marketing around this, the impact of technology on those particular supplies and demands, and the impact of those pricing changes on a product for a producer, generally speaking. Right now, working on rare earths, on lithium, and less so these days actually on cobalt and nickel. But they still remain an interesting focus. As far as some of the other issues that you just touched on, Mike, and I don't want to dominate the floor for too long, but as far as what you're discussing, I do tend to hear a lot of enthusiasm from people about how quickly they're going to own a hybrid or a battery electric vehicle. I'm a bit of a skeptic with respect especially to battery electric vehicles. I think they're a lousy marketing pitch, generally speaking. The idea that I would come out as a salesperson and tell you that I want you to spend $10,000 or $15,000 more than the internal combustion equivalent, but as an added bonus for spending that extra money, you're going to have to try to figure out where you're going to plug in your vehicle to charge it for about 2 hours when it needs a charge. this is not a big selling point for me. There are much better, there are much better architectures available for these vehicles. They are being deployed elsewhere in the world. Unfortunately, in North America especially, we're laboring under the California Air Resource Board regulations that require car companies to sell zero-emission vehicles if they want to sell internal combustion vehicles in California. It's a bit of a government overreach as far as I'm concerned, but I also have no doubt that within the next 20 or 30 years, you're going to have extremely compelling hybrid, range extended battery electrics and battery electric vehicles to choose from. This is an unstoppable trend. It's a trend that's going to require a lot of the materials that the companies that are with us today are going to be able to produce.
So that being said, then, although you have your reservations about some of the forecasts, I guess you feel that the snowball is already on its way down the hill, and we're gaining serious momentum in the EV space, and therefore
I think if no one, or if anyone here hasn't read the transcript of the speech by Toyota Canada's president at the Canadian Automobile Show in Toronto a couple of years ago, strongly encourage you to go look at it. What he's saying during that speech is the automotive industry already understands how to build vehicles that have far lower levels of emissions across the fleet. They can sell them at a very reasonable price, and they don't need government subsidies to make the business work. And for Toyota, they're called hybrids. Now, the traditional hybrid, a mechanical drivetrain sitting next to an electric drivetrain, that was a bit of a compromise in the early days of development of these vehicles because the car companies didn't really understand. And we have car companies as our clients. The car companies didn't really understand how reliable the electric drivetrains were going to be. They didn't want to strand someone who had bought a new hybrid by the side of the road because the electric drivetrain had failed. So what they ended up doing is they basically piggybacked the two side by side. Call it parallel hybrid. It's expensive. It's silly. The electric drivetrain is extremely reliable. And so now they're relying more and more on the electric side of that equation. And they're producing cars that have, well, best example I know of is a luxury SUV out of China called the LITHIUM 1. And it is a gorgeous SUV. It's all electric, but it carries a gasoline engine and an alternator. So what happens with this thing is charge up the battery. It's a relatively small battery for a vehicle that size. But if you need to drive a very extended distance in a given day, you may not do it that often, but if you need to do it on a given day, the gasoline engine will turn on, it'll turn the alternator, it'll produce electricity, it will charge the battery and keep the car moving down the road, and you don't have any compromises. The wonderful part about it is the battery is small enough and the gasoline engine is small enough that it's actually cheaper than trying to put some ridiculous twin supercharged V8 under the hood to get the same performance.
Sure.
So it's a good compromise, and yet it's an electric vehicle. Most days it produces no point emissions.
So onboard charging, basically. And in the future, I guess that could be, earlier we were chatting with this, you said it could be a fuel cell on board. I guess you could somehow, depending on how exotic like these solar panels can be, but maybe you can wrap the car in some sort of a photovoltaic material and have some charging from that aspect as well.
Yeah, I mean, I'm a physicist. I understand how diffuse the energy from the sun is, but I mean, that's a possibility. I mean, it feeds though into what Harry is going to talk about, which is I've heard arguments that PGMs really won't be necessary in the future in the automotive industry because we won't have catalysts, catalytic converters on board, because there won't be any internal combustion engine emissions to worry about, and we won't need, anything else on board except for our batteries. My response to that is good luck. Throughout most of the world, your primary vehicle has to be something that has very few compromises attached to it. If it's going to be a fuel cell driven or an internal combustion engine driven range extended electric, it's going to carry some PGMs. Yeah, that isn't going away.
Well, that's great. It's very interesting, and I think it helps highlight that we are still in the infancy of all of this, right? And there will be directions that we move that perhaps aren't on the roadmap today, or not being well understood or widely talked about. But I guess the bottom line is the vehicles will have batteries in them. They will need nickel and lithium and cobalt. And they also will likely have some sort of combustion component to them, and therefore,
at least for a while, yes.
Yeah, will be essential. Okay, well that's great. I just for the sake of moving on here, we want to get everybody in, and thank you, John. We'll be back to you shortly. But David, I'd like to turn it over to you. As John has just done, maybe tell everybody a little bit about yourself and what you're up to, and Oberon Capital, and yeah, and get jazzed up on the exploration front.
Thanks, Mike, and I do appreciate the invitation. Thank you, Andrew and Mike, for that. I think one of the things that Mike said, IBK is metal agnostic, and certainly we're a flow-through donation financing shop. So we are completely agnostic as to the underlying metal or energy, for that matter, that we may be financing. And what we essentially do, in very simple terms, is we connect investors globally to flow through for issuers. So we provide the benefits of a flow through share, which is generally an increased premium, so more money in the hands of management to execute on their vision. But at the same time, we're able to immediately deliver the underlying common out to investors anywhere in the world. And it's been a real evolution in the past decade, away from sort of traditional flow through retail Canada, which is a fairly limited source of capital. Although you look at 2011, $1 billion of flow through, traditional flow through, and you fast forward to 2021, and there's maybe 20% of that. So retail Canada has stepped away from that sort of participation, I think in large part because of the evolution of flow through donation financing. Historically, we're about $1.1 billion in 10 years across some 150 issuers across perhaps 300 different trades. What we've seen over time has really been an evolution away from perhaps hedgers or fast money into strategic participation. So this is typically the way a large strategic will initiate and maintain a position in a company that they have interest. Perhaps they have adjacent claims. They like the asset, whatever it is, but it doesn't make any sense to participate directly. So they participate through ownership, and it allows them to leverage up their dollar. For every dollar that they give, that they invest, Oberon's able to leverage that to $1, $30, $40, $50, or more, depending on the jurisdiction. So that's what we've been seeing. Mike, in terms of the metals, it still seems predominantly gold are the companies that are coming to us, but we have, we've helped SPC while it was still private. We just finished a trade not too long ago with New Age. So, we're seeing all sorts of metals all across the spectrum. And as I said, we're agnostic, so we're comfortable with anything. It's a fairly simple model. It's proven, tried and true. Put $1 in and we'll make it worth more in the hands of an issuer.
It's a real win-win-win, I guess. A win for the issuer, a win for the individuals that are taking down the flow through, and a win for the buyer, the actual buyer, as you said, the strategic or the individual that's buying the share to own it long term because they believe in the prospects for the company. So it really is a win-win-win in our books.
Yeah, there's a piece of the pie for everybody in that, for every stakeholder, and the reality is the tax benefits that our subscribers enjoy are just included in the income of the people that are up north drilling. So there's really very limited tax leakage. I can certainly tell you that the past, there's perhaps a 6-week pause when COVID hit us last year in March. And since then, the pace of capital raise has accelerated to levels we have never seen before. to the point that it's starting to exhaust the demand of the charity side of the house of our subscribers. We were north of I think 150 million last year, and I think we've already done 2/3 of that volume, perhaps a little bit more in the first 3.5 months, perhaps driven by the budget concerns and capital gains inclusions. Fortunately, that didn't happen, but the appetite for capital, for exploration capital, certainly seems to be accelerating, and the participation by strategic buyers and other buyers. We're starting to see both individual participation, corporate participation, alongside strategic participation. So certainly an appetite for exploration capital. That seems to be the trend.
Well, that's good to hear, because certainly with the forecast for battery metals in particular, the forecast for demand use of these metals, it makes you shake your head. Some of them are doubling over the next, say, 15, 20 years, and some are forecast to potentially triple in terms of the demand. Lithium being one of them. You just have to wonder, where is all this new metal going to come from? Perhaps you can expand some existing mines, but certainly exploration is going to play a critical role in feeding that demand and allowing new mines to open. These days, it seems to take about minimum 8 years to put a mine into production, and so we have a lot of catching up to do as an industry. And I'm happy to hear that at least in Canada, people are willing to fund and be part, in terms of your comment about partnership, be part of this exploration progress and exploration business going forward here. We've come off a long drought. We had a prolonged bear market there starting in 2012. And it's nice to see that perhaps we've turned the corner and we're entering into a bull market. And certainly energy metals, the battery metals are playing a critical or a key role, I should say, in that. Well, thank you, David. If you have any other comments, we'll certainly be back and forth over the course of this program. But I'd like to now turn it over to our pollsters again. And Andrew, perhaps if you want, you can put up the next poll. This next one is, when will the necessary infrastructure be built in your country? So we understand that people are viewing this from all around the globe, and we just want your thoughts as to when you think the infrastructure might be there. We talked earlier in the program about how, in Toronto and many other places across North America, at least, the infrastructure just doesn't seem to be there to allow one to operate an electric vehicle the way they operate a combustion engine vehicle. And so when we say necessary infrastructure, we mean that you feel confident that you can use your electric vehicle and feel confident that you'll be able to fill it up with energy, to charge it up, and get on your way. So Andrew, just let me know when that comes back.
Okay. I think we can I think I've just ended the poll now. So again, it seems to be about sort of 55% in the sort of 5 to 10 year range, which I think is interesting. Yeah, no, that is. We had 0 to 5 years for people buying a hybrid or an electric vehicle, and 5 to 10. You can see how John's comments, are ringing true here. I think certainly communities are going to have to do do some very heavy lifting in terms of pushing out this infrastructure, and perhaps we'll see other companies pile on board, and perhaps the electrification stations or the charging stations of the future will be less like what we know today in terms of the petrol stations or the gasoline stations, and more something like something else. Who knows? Maybe there's charging stations at every parking lot or something, rather than having to go to a particular station. You just slap your credit card into a meter and charge it up wherever you are. But we'll see how that all rolls out.
We just had a comment come in, Mike, that speaks to something that it's a simple physical point, and yet I meet people who are in the investment community that have never thought about this. Let's say you own a battery electric vehicle, and let's say every week I get dumped with a file that says we have a brand new technology that's going to allow you to recharge your battery electric vehicle in 5 minutes. Okay, that's wonderful. So you own a battery electric vehicle. It takes a certain amount of energy to push it down the road. So let's say I need to recharge 50 kilowatt hours of electrical energy to get me back on the road. And I'm going to do it in 5 minutes. 5 minutes is 1/12 of an hour. The math is really inescapable there. If I multiply that 50 by 1/12, divided by the 1/12 of an hour, I need to charge at a rate of 600 kilowatts. Now, most people don't understand what that would mean. 600 kilowatts, what's the problem? One of those nice big wind turbines that you occasionally drive past is about 1,000 kilowatts, one of them. 600 kilowatts is about the average electrical draw of, well, near the peak electrical draw of about 120 North American homes. Not European homes, not little ones, big ones. You want to do that in every parking lot. Okay. I wouldn't mind that too, but it's going to require a small nuclear reactor in every parking lot to get it done. Sure, it's not an easy infrastructure problem. You know, the idea that every car is going to carry nothing but a battery and it's going to plug in to recharge, and it's going to happen in 5 to 10 years because we're going to build the infrastructure in that time, unless you haven't noticed, the governments in the United States and Canada are not pushing anywhere near hard enough to make something like that happen. It's pretty much an intractable problem.
Well, I'm going to come back to you, John, and ask you about some investment strategies then, looking at how you see the future, because it's always interesting to, for me at least, to boil it down to, okay, well, where am I going to put my money then, right? How do I hedge the situation? We all understand that the electrification of the world is happening, and that battery driven vehicles are not going away. They're simply going to grow. Yep. And so how do we participate given the multitude of scenarios that may happen? But at this point, I want to turn the panel over to Harry Barr, because we want to make sure that Harry gives us a good solid update here. And I know that he does need to run before the end of the hour because he's got other marketing initiatives that he has to do. So Harry is the chairman and CEO of New Age Metals. And they have, as I mentioned, lithium and palladium projects in Canada, and perfectly suited for the new world of electric vehicles and electrification. So Harry, over to you. Give us the update and let us understand where you're at and all the good stuff you're going to do over the next short while with all that money you just raised.
Well, thank you, Andrew and Mike, for having us on. This slide depicts our property. It looks like it's in the middle of nowhere, but it's actually only about 60 road miles, or about 100 kilometers from Sudbury. To the right of this, where the truck is on that picture, is a paved road. And as I say, we're about 100 kilometers from Sudbury. So great mining jurisdiction to do work in. This is our flagship project. It's a question I didn't ask. How do I move to the next slide here?
Hang on, I will move it for you. Hang on.
All right, thank you.
Oh, sorry. Sorry.
There we go. So 2 green metal divisions, the platinum group metals and lithium. In Ontario, we have our Sudbury area. We have our PGM project. It's primarily palladium. Palladium's hit a new high the last couple of days of over $2,800 an ounce, and they're talking that it could go to 3,000 or 3,500. It's been in deficit for many years, since 2012. Tighter pollution standards, both in Europe and China, are giving it a lot of demand here for the metal. Disruptions in the Russian mine problems in South Africa have added to the supply concerns. And the car companies are scrambling as they're coming on with more production. So I think it's a good place to be. We've got a very experienced group, both our directors and The managers of the company are all veteran engineers and geologists. We're developing one of the largest palladium projects in North America. Next slide, please. The go forward plan on the project we have in Sudbury is we're financed now to complete a pre-feasibility study. That should be done by the end of the first quarter. So there will be announcements will be coming out on the development of the pre-feasibility study. We've hired 4 engineering companies and we're starting the process. And we also will be doing some exploration. The project has, it's multi-million ounce project, but it has lots of exploration upside. So there'll be a lot of news coming out of that division. We move over to the lithium division. The picture here is the white material is the spodumene, where our lithium is inside the spodumene, and we've got 7 projects. Next slide, please. We are basically in Manitoba, all road accessible. We're in and around the Tycho mine that's been going since 1969. It's a very large pegmatite. We have 3 of the projects of the 7 are drill ready. We're financed completely for this project this year, and we will be drilling on Lithium 2 sometime in the next couple of months. Lithium 1 down below in the south is ready to be drilled, and the Lithium West project is 2. We've done 3 projects just recently. We've flown with geophysics, drone geophysics, and we expect that we'll probably fly all of the properties before the year's over to help us pinpoint some more drill targets. But 3 of the 7 projects are ready. We have an exploration agreement with the Seguin First Nation, and a good place to do work in terms of trying to discover lithium in Canada. Next slide, please. That's each one of the ones that are drill ready highlighted. You can see the access and everything is road accessible. And our Lithium 1 project had been drilled in the late 1940s, and we have a non-43-101 resource of about 544,000 tons at 1.4%. Lithium 1, we found up to 4.1% lithium on surface. And the Lithium West, we're just getting ready to get our drill locations there. So lots of news coming out of this area here. As time goes on, we hope to find a joint venture partner to help us develop these projects too. And we've got lots of interest on that right now. Next slide, please. I guess that's it.
Okay, thank you, Harry. Maybe you'd like to tell us a little bit about your recent financing events and how you're fully funded over the the course of the next while. Let us understand more about that and what you see the news flow being.
Yes, well, thank you to IBK and some of the bigger financiers. Mr. Eric Sprott has come in and basically put 700,000 in last year and started with $1 million and then upped it to an additional $5 million this year. So he currently owns about 19.9% of the company, and will go over once we get a shareholder vote to about 26%. So we have about 8.6 million in the treasury now, with another 1.9 in escrow from Mr. Sprott until we get that vote. So we're in great shape, Mike, thanks to you and others in terms of financing, and we're fully funded for the next 18 months or more. And that will help us complete our feasibility study on the River Valley project, additional exploration, drilling, geophysics, and then a good round of work on the 7 lithium properties too.
So is it, I guess you can characterize it as your palladium project, you're further developing it by way of these economic studies to show viability of the project in light of current palladium prices and the other metals in the mix. So a good update there, and then it's more of an exploration play on the lithium front, right? Just good old-fashioned exploration. So you're on the exploration curve on one, and I guess on the refining sort of development side on the other. What are your prospects for the lithium project, and you mentioned you might joint venture it, but what about the palladium project? Are you looking to partner with that one or sell it, or what's the?
Well, somewhere down the road, a partnership certainly isn't out of line. We'd like to get this study done, at least this one, and possibly the feasibility study. there's, I think there'll be more and more interest. The last study we did with the PEA was done in 2019. It was done at a price of $1,200 palladium. And as I say, it's over $2,800 today. So the economics of that project have changed. We do have copper, nickel, cobalt, gold, and platinum there too. And all of those prices have increased too. So that's more a development project, but there's still a lot of exploration upside on that project. We have a lot of targets we just haven't drilled. We've decided to focus more on the feasibility of the project. Whereas if we go to Manitoba and our lithium projects, there's certainly more grassroots, more of the first round and maiden drill programs. And we've basically put together one of the largest land packages in this area. And we'll be developing it as we go forward too.
And the palladium deposit that you have, that's one of the larger ones in Canada.
It's one of the largest, well, in North America, yes. I would say it's the second largest at this time. The multi-million.
Yeah, no, that's it's important, especially if these companies are looking to diversify production jurisdictions. They, to move into North America, I think would be an important decision to make. Obviously, it depends on where the deposits are, and you have one that's right there just outside of Sudbury, so great location in terms of logistics, and you've got the size, so that's great. That's great. We look forward to good things happening on both your projects, Harry. Do we have questions from the audience? I know we need to get.
Yeah, I mean, I think there is a kind of a question which is in the chat box, which is asking about the difference between brine and hard rock lithium projects. I'm not sure if that's one that you want to pick up, John.
I can try, and it's a point of debate in the lithium industry generally. So Harry is lucky enough to have signs that his project has really good grade. Anything over about 1% lithium oxide grades in a hard rock project is worth looking at. Obviously, there are other concerns that arise, which is location and available infrastructure and cost of mining and all of the rest of it. But at least you're starting from the right position. But the wider question is, what do you do in the difference between brines and hard rock? Why would you prefer one over the other? 10 years back, there was worry about brine not being able to be pure enough to be battery grade. Forget that. If you ever heard that, don't even think about it ever again. The best quality supplies of battery grade material today come from brine producers. Brine is generally less expensive, so that's one big advantage. The hydrometallurgy, taking the lithium out of the rock and putting it into a solution, is already done, because what you're doing is you're pumping water out of the ground and it already contains lithium in solution. So that's a big bonus. The downside is you've got a bunch of contaminants in there that can really screw up the quality of the deposit, especially magnesium and calcium. If you have too much of either or both in a brine project, your costs are going to balloon and you're going to end up without being able to produce it at an economic price point. Hard rock has the advantages that what you mine day in and day out is probably about the same. The processing is really rapid. You can get the product out very quickly, and it's a tractable economic problem, providing your grade is reasonable. Once you've dealt with the contaminants, you know how to deal with the contaminants, and as long as I said it's economic, you're fine. There's a lot more hard rock out there than there are amenable brine deposits. If you start wandering into areas like oil field brine or paleo brine, definitely, and no pun intended here, take that with a big grain of salt, because the paleo brines are generally very low lithium grades, under 100 milligrams per liter, and they usually come attached with some really whopping high levels of dissolved calcium. That creates a massive problem in extraction. It basically says you're going to have to invent an entirely new technology to process those. So we really are limited to the brine supplies that we have and an increasing number of hard rock mines. in terms of providing much more lithium out there. With one small caveat, I mentioned we worked for POSCO earlier. There was a Canadian company that we also found some money for called Nemaska Lithium. The common theme in these two projects was an electrochemical method of processing. They put lithium in solution and then apply electricity and an electrochemical approach to create lithium hydroxide. The advantage to these things was they were tested, the technology works. POSCO is actually commercializing it now, and it produces lithium hydroxide at a very low price point. It can work either with hard rock or with brine. It will bring the cost down substantially in terms of producing these lithium chemicals at battery grade. Now, whether they ever reflect that cost in the market price or they just take it as an enhanced margin, I don't know. But the point is, they not only produce very, very good quality chemical, they also improve the recovery efficiency of the projects dramatically, especially on the brine side. So where before a brine project might recover 40 or 50% of the lithium in solution, using these new technologies, you might be able to recover as much as 80% of the lithium from the same volume of water. So you've substantially increased the availability of lithium simply by switching processing technology. And that might make the difference as we move towards higher and higher lithium demand.
It certainly could open up many deposits that are currently not viewed as potentially economic, right? As you
Absolutely, yes.
Grade or contaminants or what have you. Yeah. Interesting, very interesting. Thanks, John, for that. And we should move on now, though, to Grant. Grant's been waiting patiently. Hi, Grant. How are you? Grant Mourre is the CEO of SPC Nickel. They have nickel assets up just outside of Sudbury. And they've got, with this, Grant, with your company, I always look at it as very great grade. You've got really eye-whopping grades coming out of your projects. And I know you're drilling in areas where you're highly confident you'll find lots more of it. And so please let us know a little bit more about SPC. You had your launch. You just went public this year. Earlier this year, you had a very successful pre-IPO raise. You've got really interesting shareholders in. Well oversubscribed. I remember fighting to get more of my clients into your offering. So it went really, really well. And I gotta hand it to you, Grant. You did it. You took it public on time. You did it on time, which is so rare. You had to wrestle with the regulators and with the exchange, but you did it. And so your exploration can go as smoothly as your listing went. Well, smoothly on looking at it from the outside, but inside, I know you had issues, but you got it done. So hats off to you. But please, let's hear more about SPC Nickel and your prospects going forward for nickel exploration.
Thanks, Mike. Yeah, so let's go to the next slide. So as Mike said, my name is Grant Mourre, and I'm the CEO of SPC Nickel. And one more, there we go. And just a little bit of background. We're a new junior exploration company listed on the TSXV, and our focus is really for battery and green metals, but really looking at some key assets within the Sudbury mining camp. And some of the features that we feel make our story fairly attractive. A good, strong management team. We've got a proven track record of success in the commodities we're looking for. We've won a few awards, and we're also, experienced exploring within the Sudbury Basin, which can be quite challenging. As both, John and David pointed out, we're in a good spot with regards to market cycles for both the battery metals and green metals, so things like nickel, copper, platinum, palladium, cobalt, all the commodities that are found within the deposits that we're looking for. And probably the most important point that separates us, I feel, from other junior nickel exploration companies is that we're one of the few exploration companies actively exploring within one of the proven nickel camps in the world. I spent most of my career in nickel and know that it can be extremely challenging to find a nickel deposit, but even harder to find one that's economic. So when we started the company, being focused in Sudbury, we knew we gave ourselves a bit of an advantage because it's a proven camp, and it's a camp that produces high-grade polymetallic deposits. So we're not only in a good camp, but we have some good assets bookended by some world-class deposits that are either in production or being developed or past producing mines. So we have two assets in Sudbury, our Airkid project and our Lockerbie East project. And then we have a third project, which is a copper nickel palladium project out towards where Harry's River Valley project is, called the Janes property. And we're well financed, as Mike pointed out. We raised $7.8 million last year, at the end of last year. So we're around $8 million right now. We've got a really aggressive exploration program planned for the next 24 months. 2 drills have started turning on our Airkid project right now, and we'll be ramping up our exploration activities on our other projects once the summer shows up. So we should be busy over the next couple of years. Lots of news flow, and hopefully there's a discovery in that news flow. So next slide. Actually, if you just go one more too. But at the heart of SPC and the story is really the fact that we are in the Sudbury mining camp. And for people who aren't familiar with Sudbury, it's about 4 hours north of Toronto. It's arguably one of the largest nickel camps in the world, probably next to only Norilsk in Russia. A long history of mining, 125 years of continuous production. Sudbury is dominated by three of some of the largest nickel companies in the world: Vale, Glencore, and KGHM. And we're one of 2 junior exploration companies that actually have a property position within Sudbury, and we're probably the only exploration company that's actively exploring within the basin. And the great thing about Sudbury is, with the long history, all the infrastructure that's needed for exploration, development, production is all here in Sudbury. This image is taken not far from our office, and in the foreground is Vale's 40,000 ton per day mill, which is probably running at half capacity. So there's capacity and infrastructure in place for that. On the left side is the Vale smelter. In the distance, you can see the Vale nickel refinery. And if you look closely, there's probably about 4 head frames from active nickel mines just in this image alone. And our property would be just kind of on the horizon in this photo. So that's what is special about Sudbury, is there's not many places in the world like it. As far as infrastructure in nickel, this is the place to be. And Sudbury is not just a nickel camp. It's about an equal amount of copper that comes out of the ground and a lot of precious metals. I mean, Vale alone produced almost 400,000 ounces of platinum and palladium out of Sudbury last year, and that doesn't include KGHM and Glencore. So high-grade polymetallic deposits that are high value and make sense through a lot of ups and downs in commodity prices. So next slide. This is just kind of a zoom in, a long section into one of our key asset, which is our Airkid project. And that's in between the dashed lines that you see. And this project is bookended by 2 world-class nickel projects. To the southwest of us is Vale's Totten mine, which went into production in 2010, and at the time was around 10 million tons of 3.5% nickel and 5 grams of precious metals. So, anyone that's familiar with nickel knows that these are extremely high-grade deposits, high-grade, high-value deposits. Totten itself is probably around $600 to $700 per ton ore. So it just is economic, and it makes sense to justify the capital cost to put these things into production. On the other side of us is the next project, the next new mine in Sudbury, and that's owned by KGHM, and that's the Victoria deposit. And that project is being developed as we speak. The infrastructure is going in. Soon there will be a shaft being developed down to this deposit. And this is one of the highest undeveloped nickel deposits, highest grade nickel deposits in probably the world right now that's not in a production. And without any underground drilling, it's at about almost 15 million tons of 5% combined nickel copper and 8 grams per ton precious metals. So $900 to $1,000 per ton ore. So this is really high grade, high value material. And these deposits are deep. You know, they start at around 800 to 900 meters vertical, extend down to 2,000 meters. Sudbury, that's not that deep. They're building mines right now at 2,500 meters vertical and mining well past 3 kilometers. And the reason they can do that is because the grade and the value of the ore is so high. So our property sits in between. It did see some past production back in the 50s and 60s, but it's got the same geology, same style of mineralization. The mineralization, when it's intersected, is very similar grades. We're using the same exploration techniques that were used to make the discoveries at both Totten and Victoria. As I mentioned, we're well financed, so we've got a $3.6 million 20,000 meter program underway on this property. That'll be for the next, better part of 2 years. We'll be drilling on this property, and really our objective is to find a Totten or Victoria sized deposit, probably below the 1,000 meter mark. And given the proximity to some of this underground infrastructure, it just adds value to us. We're not that far from producing shafts that are available for access from underground. So next slide. Small corporate snapshot. We've only been trading since the beginning of March, so about 6 weeks in. We've got about 111 million shares fully diluted, market cap at around 33 million. If you look at other junior nickel exploration companies, the spread on the market caps of these companies is between 30 and probably 100 million. So we're certainly at the low end right now. So we think there's a lot of value in the company. And frankly, I like our assets being in an established camp ahead of some of the other companies out there. We've got a pretty robust exploration program planned for the next couple of years at Air Kid, and we'll also be advancing exploration on our Janes property this summer and the Lockerbie East project. So there should be lots of news, lots of activity coming out of SPC Nickel. I think that's it.
Excellent. Thank you, Grant. We just have a question here that came in from David. Does SPC plan to explore from underground?
It would be nice, but unfortunately, the underground infrastructure is inaccessible. I think the last production was kind of in the mid to late 60s, and since then, the shafts of the head frames have been taken down and the underground workings are flooded. But we are in probably less than 700 or 800 meters away from existing infrastructure on the Totten side. So it does change the economics for us for sure. But for now, all of our drilling happens from surface, which does mean we have to do a lot of deep drilling. So some of these holes are over 2,000 meters, and they do take quite some time to get down there. But they're high risk, but very high reward if you're successful.
Thanks, Grant.
And I guess today you've got all sorts of ways to ensure that you hit the target in terms of the drilling technology, and also your downhole geophysics must shed a lot of light on the plates where you may want to wedge off to or angle off to in terms of bettering your chances with these deep holes.
Yeah, Sudbury it's got a very complex geological history, but for the most part, the exploration is pretty proven. I mean, it's been the same techniques for the last 100 years, and it's been drilling and borehole geophysics, and it works. And so that's the same. We employ the same techniques as used by our neighbors, and it's been successful for them, and it's worked for us as well.
So when do you expect news to start rolling out from?
I would suspect it'll be towards the end of next month into June is when again, a lot depends on the backup that we're seeing at the assay labs. That's probably the biggest bottleneck right now is actually the assay labs. I mean, what used to take a couple of weeks to get samples back is now taking 4 to 6 weeks just because of the COVID protocols that they have in place. So it certainly slows things down.
And other companies across North America, it seems, exploration companies are becoming frustrated with the availability of crews and drills. Are you guys all set up and good with on that front?
At Air Kid, we are. We do have 2 drills up and running, and as we were talking before, I mean, I think we locked those up at the end of last year. And if we hadn't, I don't know if we would have been able to source any this year. It's a problem that the industry is facing. Is just the availability of drills, but more particularly the people to run the drills.
We just have a question from the audience here. Does Vale have any royalties or rights on the deposits?
No, on our 2 properties, the Air Kid and Lockerbie, Vale does not have any rights to any of the ore, if that is found.
And then a question about exploration and techniques used. You said it's pretty straightforward, but are you going to use AI, or have you used AI techniques to help de-risk?
We have not at this point. You know, given that there's been such a long history in Sudbury, the geological models are pretty well understood, and you know, we simply have to look to the east or the west of us to understand what our targets are. So, and you know, we're not talking about a 10 or 20 kilometer land package. It's a fairly compact land package that you know, we have a pretty good handle on where we should be focusing our exploration and the techniques to do it. So at this point, we haven't ventured over to that stage yet.
Yeah, there are a number of companies that are pursuing that. One of them is Windfall Geotech. I mentioned them just because they're active on another one of our portfolio companies, and they squirrel away in the background with all your data, and it's amazing. It's just amazing to see what these sophisticated programs can put out in terms of results, possible targets. So it's becoming more and more used, common, and available. So you may want to consider a group like that, because like I said, they kind of just do it all in the background. It doesn't interrupt the day-to-day of companies' exploration programs. You don't have to stop and start and stop and start in terms of using them. So that's a great question. You mentioned that there was a press release that came out about consolidation of a property, the Landor Resources acquisition. Are you looking to just finish off consolidation on all of them, so you own them 100% outright, you know, as quickly as possible? I mean, one discovery, right? And things can change forever.
Yeah. That release was about the West Graham property, which is part of the larger Lockerbie's property, and we had purchased that. It was a kind of a unique situation, but we purchased that property out of a bankruptcy sale from a previous company called First Nickel. And as part of that agreement, First Nickel had an underlying agreement with a company called Landor Resources, and for the West Graham property, which has the West Graham resource, and that is a 10 million ton resource that's within 40 meters of surface of about a 0.6 to 0.7 nickel equivalents. And when we took that property, and the previous underlying agreement was basically canceled at that point, and it left us with a 70% interest and Landor with a 30% interest. And it really prevented us from doing much work on the property because we didn't really have a mechanism to move forward towards 100%. So we had discussions with Landor. We purchased their remaining 30%. So now we have 100% of that deposit. And you know, that deposit as it stands right now has got over 100 million pounds of nickel in it. It's as I said, it comes within 40 meters of surface. It's right beside a past producing mine, hydro line, rail line, highway. So as we hope to see nickel prices creep up here in the next couple of years, I think that property will certainly become something that's very interesting for us, given that, you know, there is significant capacity at the existing mills in town and the smelter for custom feed.
So for now it's drill, right?
Yes. Yep.
Okay. Excellent. Well, it looks like it's 1 o'clock, Andrew. I take it that means that we're out of time. There are a couple more questions here if people want to take some more time, but Andrew, I'll leave it up to you because technically
Yeah.
you've timed out.
Yeah, I mean, what I can probably do is take those questions off and just post them. I think there's one or two there for grants. I'll just post them to you afterwards. But I think they did, probably in the interest of time, I just want to thank our panelists for this week. Obviously, thank you to you, the audience. Obviously, many thanks to our sponsors, IBK, as well as to the Resource Global Network. See you next time. Until then, stay safe. Thank you very much.
Thank you very much, Andrew. Thanks
Thank
to all
you.
the panelists.
Bye-bye.
Bye.